In this month's Economic Update, Kaplan Professional Education's Trevor Trahan speaks to an industry economist about the short-term domestic and global economic outlook.
Welcome to Kaplan Professional Education's monthly Economic Update. I'm Trevor Trahan, and this month I'm joined by the Australian School of Business's Fellow of Economics, Tim Harcourt. Thanks for joining us today, Tim.
Good to be with you, Trevor.
Australia's GDP grew faster than expected in the first 3 months of the year by 0.9% on the previous quarter, instead of the consensus estimate of 0.7%. What drove that result?
Well, that was a really surprising GDP figure. It was well above what market economists expected and probably official forecasters too. Business confidence being low, the mining industry's been subdued, but exports came through very strongly, much greater than expected, and even household consumption hasn't been too bad. So we actually had a much better result, and most countries in the Western world would be quite happy with that GDP result.
However, the key measure of disposable household income only rose 0.1% in the first quarter and was flat over the past year. Is that cause for concern?
I think it is. I mean, what it showed was that exports rather than the domestic economy were holding up our GDP numbers, and as you quite rightly point out, household income's been quite subdued. Wages compensation for workers has been quite flat, quite subdued, and that's holding the economy down. And even the Fair Work Commission just provided a 2.5% increase in the federal minimum wage. So there is a view that we do need to boost wages and household income in Australia.
How do these GDP results impact the Australian dollar?
Well, I think people have been watching the Australian dollar in terms of commodity prices, because that tends to drive exchange rates as well as interest rates. For the most part, Australia's been picking up some market share in commodity exports. That should actually drive the dollar high to some extent. But of course, the Reserve Bank has responded by not moving interest rates, not hiking them certainly, and that would probably be a downward effect on the Australian dollar.
You just got back from Brazil. How is Chinese investment perceived there compared to Australia?
Right across Latin America, there is fear of Chinese investment in property and agricultural land. However, in the case of Brazil, Brazil was really lacking in terms of infrastructure, and we saw that during the World Cup in 2014 and the Rio Olympics. And whilst I was in Brazil, the Chinese government, the Premier, announced a major infrastructure project to build a railway from Brazil through to Peru. So it's probably, in terms of infrastructure, which is badly needed in Brazil relative to Australia, Chinese foreign investment is welcome.
South Korea's exports suffered the biggest fall in almost 6 years in May. Is the slowing of China's economy to blame for all this?
Well, China takes about 26% of South Korean exports. It's only second to the US, and in fact, in terms of imports, it takes about 16%. It's only second to Japan. So very much South Korea is dependent on the winds of fortune in China. So a slowing China does have an impact on the South Korean export sector. But South Korea has also been very much dependent on its tech sector, and the subdued tech sector globally has had impacts for Samsung and some of the major Korean chaebols that have been adversely affected.
HSBC forecast Indian economic growth of 7.8% in 2015 compared with 7.3% for China. Do you think this is likely? What would it mean for Asia at large?
Well, I wouldn't get too carried away with the Indian GDP data. They had substantial revisions last quarter, so there is a view that the stats are sort of out of whack in any case. So most market economists are playing down the latest GDP numbers in India. Having said that, we've had Modi in now for a year. There's been substantial infrastructure and defence expenditure, and Modi mania has sort of been a bit of a charm offensive in Japan and in China and indeed in Australia. So you would expect, regardless of how the data is collected, at least 7% growth in India, is probably expected, and they probably should go a bit higher. China's always had this Walmart foreign direct investment impact. India's largely been Indian nationalism, large Indian firms like Mittal, Infosys, Tata and so on. So India's not as trade integrated into the region as China is. It probably will be more so in the future, but ultimately you want India to be a much more open economy, to have more impact on Asia than otherwise China would, because China's already got very strong trade and investment linkages.
Which emerging economies in Asia do you expect to grow particularly strongly in the next 2 to 3 years?
There's a lot of focus obviously on China and India, the two superpowers. I'd put a lot more store in the ASEAN economies now, in Indonesia, in the Mekong Delta, Thailand, Vietnam. Those emerging economies are going to play a bigger role. And I think for the most part, Japan and South Korea will play an investment role. Mostly the growth's going to come out of the three engines of growth, China, India and the ASEAN bloc itself.
Federal Reserve Chair Janet Yellen said she expects to begin raising interest rates later this year. What has sparked this development?
Well, they've had a lot stronger labour market in the US than they anticipated, and the real economy has been coming back in the US. There used to always be a story that China had too many shippers and not enough shoppers and it had to boost its local consumption. America had too many shoppers and not enough shippers and they needed to boost its manufacturing and its competitiveness. That's starting to come back now, and so there's a lot more strength in the US economy, and there is a view in monetary policy, you don't put on the brake, you sort of take your foot off the accelerator a bit, and I think that's probably what Janet Yellen would be thinking about because she's a very strong analyst of the labour market and the real economy.
US consumers remain cautious though, with spending growth unexpectedly stalling in April. Do you expect that to change throughout the rest of the year?
Well, I think the GFC, the Great Recession, did have a big impact on the American consumer, particularly in the labour market, so there has been a lagged effect of some of that. I expect there's some structural changes in the US economy that is also impacting on consumers, and we still have only had about a year of that more impressive employment growth, so that will start to kick through towards the end of the year, but still early days, and you saw that in April that there's still a bit of jitters in the consumer market.
What growth rate should the US be targeting over the next 5 years?
Ultimately, you want to be somewhere between 2.5% to 4%, probably as Australia's been able to produce. I mean, the US obviously has much larger scale. It has a lot more competitiveness challenges than Australia, but ultimately you want to be ticking up to 3%. Maybe even 4 if you can, but at the moment I think the US would even take 2.5 to 3.
Eurozone consumer prices rose for the first time in 6 months in May, averting a slide into deflation. How optimistic can we be about the region based on this result?
Well, I think when you think about the Eurozone, you've really got to think about Germany and the rest, and then the peripheral economies. And for the most part, Germany's always had an anti-inflation bias because it's very strict monetary policy and so on. So the fact that we've escaped deflation is probably a good thing, but you'd still say that growth is pretty unbalanced in the Eurozone.
After Greece's economy emerged from a 6-year recession last year, it shrank by 0.2% in the first quarter of this year. What are the main factors behind this regression?
Well, we've had the traumas of my big fat Greek debt, haven't we, in Europe, and there is a view that a German factory worker working in Dusseldorf until he's 70 doesn't want to pay for a Greek pension in Athens for someone who's a retired public servant at 50. So there's that tension within the fiscal union, and I think to some degree the anticipation of a Greek exit has caused some of the difficulties now with the Greek economy. So there's negotiations between the new Greek government and the rest of Europe are still going to be pretty tense, and that's likely to impact on Greek activity. Ultimately, there'll have to be some sort of restructuring of the Eurozone. I think the great European project of reducing tariffs and having more trade within Europe was a good idea, but I think putting together everyone in the same straitjacket with one currency, one central bank, one foreign policy was just going too far, and they've got to sort of restructure that. It's hard enough in Australia with a federation of 6 states and 2 territories to manage a common fiscal and monetary policy. Imagine trying to do it in Europe with 29 countries or so. So I think there's going to have to be a revisiting of the European project.
Support for the EU is mixed across the various European countries, but does a Eurosceptic outlook have any impact on how the EU economies perform?
Oh, I think it does, because ultimately it would put pressure on David Cameron and Angela Merkel with their own domestic economic decisions and also their stances towards Europe. And we saw the Bank of England leak a submission on what Britain should do withdraws from Brussels. So I think most of the economic institutions are preparing for a radical change in Europe, and that ultimately affects confidence and ultimately affects their own decision making. And the Bank of England has to watch what's going to happen north of its borders with respect to Scotland and how that would impact the pound and the currency, and also they have to look across the channel to what's going to occur with the central bank and what's going to occur in Brussels.
Thanks for your time today, Tim.
Thanks, Trevor. Good to be with you.